Margins really were the big positive. Now on the top line, we are expecting a cut of closer around 3% approximately. That really was already factored in by the street. But the volumes, as you mentioned, that came in higher by closer around 9%. So that was offset because realizations did come in lower by 8% on a year-on-year basis. But the volumes, that was a positive. It came at the higher end of what the street was estimating at around 6.36 million tons approximately. If you take a look at the last few quarters, this in fact was the highest volumes that we've got on a per quarter basis, just in comparison with the last 3 to around 4 quarters. Now, in terms of operating profit, that's really where the big beat came in because they delivered an operating profit of around 430 crores. We were bracing ourselves for an operating profit of around 350 crores. Even margins came in at around 14%. We were expecting a number of around 11 to around 12%. So there was a big beat. What really caused this beat was the decline in power and fuel costs. That came in low on a year-on-year basis. And if you equate it on a per ton basis, that was down by close to around 16% because they've started using more amount of pet coke, and pet coke prices were lower on a year-on-year basis. So they benefited from that one. Even a quick check on a sequential basis, you'll see employee cost as well as other expenditure. Both those two costs were sharply low on a sequential basis. Maybe in the last quarter, we did see the year-end phenomena play out because ACC follows calendar year ended for their results. A quick check on their RMC business. That's a concrete business. Not only did we see the revenues come in higher by close to around 10%, we also saw the profitability increase over there, and that's a positive. All in all, a good beat coming in from ACC.